Good morning. Good morning. Come on in. Good morning. Couple housekeeping things. We are recording this, so we'll send it out to anybody who's registered today. And we also have the Q&A section open. So if you guys have questions throughout this conversation today, feel welcome to throw your questions in the Q&A section. I think we'll have a lot of time to get to like as many questions as possible. Come on in. And to make sure our chat feature is working, throw in where you're calling from this morning or where you're joining in from this morning. All right, I see some rolling in. Perfect. Some early folks. Atlanta.
Nice.
I see some
Cool.
Chicago in there.
See some
Mm-hmm.
California. Shout out
Yep.
San Diego, where I'm at, if anybody is from San Diego.
Yeah, waking up at 5 a.m., 6 a.m.
Yeah, maybe there's not too many San Diego
Ooh,
people.
Savannah. Savannah, Georgia. I love Savannah. That's where I got married. I will probably live there one day. Sacramento. Well, welcome
I'm
everybody.
I'm
A couple
excited.
how
I'm excited for today's webinar. I'm real curious to see what you guys say if people should buy houses or not.
It depends.
yeah. I think what's interesting, all of us on this, like all of us together today, we've bought within the last like couple years. Each one of us have. So we have our own like personal stories that we could throw in today too.
But we
My
all
personal
must
Welcome,
be
everybody.
crazy.
my personal story is I regret everything. I wish I was a renter still.
Is that story a horror story?
It's a really bad horror story, but I don't know. We're recording this, so it might be kind of dumb to share that.
You
All I'm saying is, the interest rate is the least of your problems when you're buying a house. You maybe should look at things like, does the plumbing work? Is the are the are I mean, like, honestly, I wish we had paid to do a snake cam on the drains
Mhm.
just to see the horror that was lurking below.
Oh no. Well, you had a
So
We
huge
did
reno
that.
project.
Yep.
So, oh yeah, go ahead,
yeah.
David.
But Travis, did you buy a fixer?
Oh, it was a like, what can I say? It was like a bombed out World War II era, you know, place with no plumbing basically.
Oh.
I'm joking a little bit, but not like, it's not a huge exaggeration. Like, the water main broke, the pipes broke, like, the I don't know, like, we had squirrels living in our house because we didn't realize there was like demon woodpeckers that drilled a hole through the whole siding of the house, and all the squirrels were having
Mm.
like a raging house party every night
It
in
just
the
sounds like a Disney story.
in the walls.
That sounds friendly.
And we were like, how do these squirrels and mice keep like running through our house? Like, how is this possible? And then, like, I looked up one day at the chimney, and there's this like gaping, gashed hole in the side of the house. And I'm like, I saw like woodpeckers just like having a party up there. And I was just like, oh my gosh, this is
The
this is our
problem.
problem. This is our problem. And then so we put like a steel patch on the top of that part of the house, and they moved to a different part of the house.
Mm.
So it's like, um, so I'm encouraged to hear why we should buy a house, because I'm definitely, my PTSD is strong. I mean, luckily we figured it out, and we had the resources to figure it out, and hired all the pest people, and we did an extensive renovation to. We thought maybe if we paint the house the color black instead of the color brown, the woodpeckers won't be idiots and they'll think it's a stone instead of a tree. So,
Mm.
we'll see on that. But, you know, so far, so good, knock on wood. So excited to see Elle's presentation today. I'm going to be chilling and hanging out in the chat because otherwise I'd probably cry. just talking about buying a house with, my gorgeous 2.75% interest rate. Well, that's great, except, you buy a house with no plumbing. Oops. So there's a lot that goes into this decision, right?
Yes,
Oh.
and but I am very jealous of your 2.75%. My house didn't have any plumbing issues.
Well, it's like
But
we got the 2.75, but then we had to spend more money than the whole cost of the house fixing it up, right? So that's like
so it
so
is a
that
real fixer.
oh, it's a fixer on steroids. I mean, fixer on steroids. So, so I think that hopefully what we'll find out today is that there's a lot of different paths, and like, you know, the newer the better if you can afford it.
Not
So,
necessarily. We could do a whole section on new construction and the pitfalls of new
all right.
construction.
Well, I'm excited. Just let's keep people awake here because I got to get my caffeine. Baby was up all night last night, so I'm grateful to be hanging out in the chat. So,
Cheers. Let's
Cheers.
jump into it then. So just a quick introduction. I'm Megan McGuire, one of the senior consultants on the student loan planner team and advisor at SLP Wealth. And we've got David, if you want to introduce yourself.
Hey everyone, this is David. I originally was, I was a commercial real estate appraiser actually from 2017 through roughly 2020. It's in 2020 I made 2017, 2018 through 2021. In 2021, I became a mortgage loan officer, working for a brokerage, and I've been in mortgage since then. It's been a crazy ride in the mortgage industry over the past few years and the real estate industry. So we'll get into that later. And then one thing led to another. I'm also a student loan consultant with Student Loan Planner. I actually got involved with Student Loan Planner because my wife's a veterinarian, and back when we thought the payment pause was going to happen or not, or come off pause back in 2021 before they kicked the can down the curb, had a consult with Dan, kept these guys in the back of my head. One thing led to another. Now I'm a consultant with them. But I still love real estate, still love mortgage, and that's my background.
Awesome. And Connor?
Yeah, I'm Connor. I'm a senior student loan consultant as well with Megan, and an advisor at SLP Wealth. My background is in financial planning for almost 10 years now. And actually, David, you forgot to mention that you're one of our investment experts as well at SLP Wealth.
Oh, yes, I am a quote investment expert at our investment firm SLP Wealth. I'm sure we'll have lots to say about that throughout this presentation too. But yes, I'm a man of many hats, I guess.
Well, let's jump into it. This was I think a highly requested topic. And so I hope a lot of folks, like if you have questions as we go through today, throw them in the Q&A section. We'll get to as many as possible today. But let's jump into how to buy a house like a boss, how to optimize your time and savings. This is a big goal that a lot of folks have. Student loans are a lot of times the first step to like trying to get organized. And then the next big goal that we hear about a lot is I want to buy a house, I want to purchase property. But let's get into the mental stress of buying a home and how to make it more fun, because it is a stressful process, or it can be for sure. But I'll give it to you, David, to take away.
Yeah, I bought myself for the first time October of 2023. So like, I don't know, 5, 6 months ago. And oh my gosh, it was like the most stressful thing ever. And I've done over 100 real estate transactions before. Like I've done them. And maybe it's because I knew a little bit too much. So like I could just know like, oh my gosh, like if this happens, this is going to be bad. If this happens, that's going to be bad. Oh my gosh, what if that happens, right? Maybe I've seen too much, but it was nothing bad happened, but it was so stressful because, when you're buying your own house, especially the first one, especially here in San Diego in the, summer of 2023, it was so competitive. You fall in love with, multiple different properties, you get your heart broken, you have to fall in love again. And it's just, if you don't have a good team behind you and you don't have the right expectations up front, it could be really stressful. In fact, pretty much it's going to be stressful no matter what. And so, but at the end of the day, there were a few things that I, being from the industry, knew that really helped my wife and I. Here's how, but it was also fun. I emphasize the stress because of how stressful it can be, but here's how you actually can still make it fun at the same time. Number one is get prepared. What do I mean by get prepared? Well, first, when should you get prepared? Most people, major pitfall is, they decide, they wake up one morning, they're perusing Zillow on their phone, and then they decide that they want to buy a house. Or I've had multiple conversations with borrowers saying, hey, I woke up today and I think it's time. And I'll be like, great. And they're like, I want to buy, I want to go look at houses this weekend. And then I say, okay. And we build that relationship over the next week, going through their finances and like trying to pre-approve them. And it turns out if they had done X, Y, and Z things 6 months before talking with me, they could have been ready that weekend. But instead, now their lease is ending in a day, and they aren't pre-approved because we can't go back in time, right? And then it's a mess. So get prepared at least the pro 6+ months before you think you want to buy. Preferably a year. Then it'll be fun. Then you will have done everything needed ahead of time. So how do you get prepared? Okay, so 6 to 12 months beforehand. Well, you got to pick your A team. And what I mean by your A team is, hey, for 99% of people, unless you're a cash buyer, you're going to need a lender. You're going to need an LO, a loan officer, and you're going to need a good realtor. We'll talk later in the presentation of, hey, what about the noob mistake of thinking that you can do it yourself and not use a realtor? Talk about that later, but spoiler alert, don't do it. Especially as a buyer, you don't pay your realtor's fee anyway. Use a realtor. But you need that team that, hey, is going to help you get to the finish line, right? And we'll talk about what makes a good team and what you should be looking for in your realtor and your LO. But that's part of getting ready. And you don't want to do that the weekend before you put in offers, because then who knows if your team is good or not. You're not playing the Super Bowl if you just met your teammates one day ago, right? I'm also a musician, so I'm sorry if I use a lot of analogies that are sports related, because that's the thing to do in real estate, but I know nothing about sports. But educate yourself. Well, hey, I threw this one in there, if you are of the mind to be, especially, hey, shout out to all my West Coasters. If you're in a home buying seminar at 6 a.m. on a weekday, you're probably going to be fine, because you're probably
You really
of the
want
mindset. Yeah, you're probably going to listen to at least some of our advice, and you're going to get prepped, and you're going to do this the right way. So good job already. And then again, set the right expectations, it's just a numbers game, especially in a competitive market like we're in right now. And as we go into the spring market, it's probably, regardless of what rates do, going to be continue to be more competitive. Low supply, high demand equals seller's market and, competitiveness, multiple different offers. What I really mean by set the right expectations is, one, have your timeline ready 6+ months ahead of time. And then also just know before you do anything, especially if you are in one of these coastal markets, every market's really competitive now anyway, but like by a numbers game, I mean, hey, if you get your team together, you're super qualified, perfect credit, great income, anybody would loan you their money, right? And you're a real estate pro too, right? Well, you also want to be picky with the deal, right? You don't want to just buy something. You want to find the right property with your realtor to put an offer in, which means you're going to be picky. You might see 100 properties. You might fall in love with 10 of them. You might, for some reason, only decide to put an offer on 5 of those. And hey, if you are a great buyer, but it's not a cash buyer, maybe you at most you have in a competitive market like a 20% likelihood of getting an offer accepted. okay, well then that means you got to go fall in love 5 times to get one offer accepted. And hey, when the home inspection comes back, you might decide to walk because you found out that the drainage and the plumbing is not what it said in the disclosures, and ooh, right? And then you got to do it all again, which means mathematically, right there, you put in 5 offers to get one accepted and you walked away. You got to do that again. So you put another offers in to get one accepted and then you close. And so that sounds like a lot, but it's just
Mhm.
kind of like sales in general. Like, it is a numbers game. And if you're going to see properties every single weekend, maybe you put in an offer once a week for 10 weeks, and that got you your perfect property. And because you planned ahead of time, you're not rushing. You're a pro. You could go month to month on your lease, and you're willing to spend an extra $500 to save 10 grand by being picky, right? And being able to close like that versus, oh, I have to close versus not, right? So once you just back out and say, oh, okay, then it's just again like a 3 to 4 month active process to find um the right deal. But if you don't know any of that and you just go in and you just get 4 denials, and then you
Mhm.
find the right property and then you get under contract, but then like you're not okay leaving it when you find a red flag, right? That's when, like, if you just don't have that bird's eye view, you can get super stressed out, you can get locked into a property that you shouldn't have, and it's just not a good time.
Yeah.
So that's
I
what I
can
mean by
speak
setting the right expectations. But yeah,
I can
what
speak
was
to that
your
too, in the sense of like you do fall in love with like every prop because you have to like walk yourself through the house. You have to see yourself cooking in the kitchen. You have to see yourself laying on the couch in the front room.
Mm,
Like you have to like really put yourself in that property to make sure it is what you want to purchase.
yeah.
And if you're going to lose out on that deal, like it's almost like you have to be like seriously dating but not marrying something yet, right? Like the marriage comes when the seller accepts your proposal, right? So
Yeah,
it's
that's a
like,
great analogy. It's
yeah,
it's
that's what it felt
insane.
like for us. Like it really is an little bit of a emotional roller coaster, but it probably should be because that means you're also really invested in what you're looking at and what you're putting offers down on. So I think Connor, you
Yeah.
had a similar experience too, right? When you were
Yeah.
shopping.
Yeah. So this we bought our second place actually last year, but the first place was the more interesting. We bought it first off, we closed on the day that JB Pritzker, is the governor of Illinois, shut down and said stay in your homes for COVID. We
Oh
closed on that
gosh.
day. We were the last close at this particular title company in the city of Chicago before they started doing like they'll walk out to your car and in like
Whoa.
full garb and like give you your documents to sign in your car. We were actually in the conference room. Um, we so that building that we bought, we're talking about like dating and um, how do we make that decision? Was so my wife and I, we tried to be very like cold and logical about it. Like, here's the things we want. And we kept our search open and it took weeks and weeks and weeks. And then my wife goes on vacation or not on vacation. I'm sorry, a work trip to Canada for like 3 or 4 days. And of course, the day she left, the realtor gets in touch with me and he's like, hey, this property, which was taken, went back on the market. The close didn't go through. We need to go see it tonight. This was like 7 p.m. on like a Wednesday. And like, okay. So we went and saw it. We just drove around the outside. Looked like exactly what we were looking for. And the way properties were moving then, and it's probably still similar now. We made an offer the next day. And I video chatted my wife and said, hey, look at this place that we're about to make a huge financial commitment to. Does this look good to you? On like phone Zoom. So
Yeah,
yeah,
real estate is just so dramatic, but wow.
That's a good way to
And
put
I
it.
and I'm definitely gonna be picking your guys' brains on other stuff that you went through during your purchases. But let's keep this moving just for time's sake. So yeah, save and invest more than you think. We'll get into that later, but it's basically, hey, it's not just the down payment. Even if you're a VA borrower or if it's using a physician loan with 0 down, right? There's more to save than just the down payment. Closing costs are a thing. Next, how to pick your LO, because we said, hey, step one, get the 18 together. What does that mean? Trust is the biggest thing here. Like, trust is 99% of what you're looking for. The rest doesn't even like matter that much. I'll get into the rest, but trust is 99% of what you're looking for in the team that you're working with. And what I mean by that is, this says, hey, would that person, would that LO wake up on a Saturday morning on a family vacation to make sure that you don't end up homeless? And it says, true story. That was me. I do that. I have done that. My wife and I, last year we went with her family to Utah, to Zion, and spent a weekend there with her family. And I had a deal going, and I knew going into that weekend, even though we were clear to close everything, long story short, they were selling their property in Minnesota, moving to Arizona. So selling and buying at the same time. I'm only directly on the buy side, right? And they were selling to somebody using financing. And 2022 was a terrible time in the mortgage industry. Like 50% of LOs and lenders just didn't exist anymore. And so I was just like, hey, like, make sure if you're accepting an offer that's using financing that you have an LO on their team that knows what they're doing, because then you can end up homeless. And that almost happened. And so they had just moved their entire life into a U-Haul, drove cross country, was in the parking lot of a hotel in Arizona. And they call me at like 8 in the morning on a Saturday while I'm on vacation saying, hey, we're having problems with selling our home because the lender on that side is screwing everything up. And so I had to like call the lender on their sale purchase to teach them how to fix the miscalculation that they did on this VA borrower's like income.
Ooh.
And if I hadn't done that, it would have cost my borrowers, I don't know, an extra $200 a night for a hotel, plus an extra $500 per day because we're going up against a rate lock expiring. It's a mess. And so whoever you're working with throughout the transaction, but your LO specifically, like, hey, do you trust them to wake up on a Saturday morning on vacation if needed to make sure that you're going to be okay? What if you canceled your lease and you're ready to move in and then the transaction doesn't happen because they miscalculated your income? What then? Right?
Yeah.
Trust is
Do they
everything.
love it? Like, I think that kind of leads into that second point. Like, are they hungry? And I remember our lender, like, he felt like he loved his job. Like, he loved mortgages, and like, he wanted to go on and on and on about, that's a bad way to say it, but we loved it. We loved how much he seemed to really enjoy his job and enjoy being part of the process, and just quickly putting together like proposals or estimates. So that was a big thing for us, and that showed us that he was really hungry for the business and willing to work for it. And he was really a go-getter, I guess you could say, and very
Hey,
knowledgeable. That leads into that third.
hey, David, can I ask you a couple questions about the industry, if it's all good?
Oh boy.
Yeah,
Sure.
so giddy up. We obviously have mortgage advertisers on our website, so we see like a full gamut of different types of people out there and get feedback on a lot of different types of people. So I guess one interesting thing to me is there's like the traditional mortgage loan officer arrangement is they get paid a percent of the mortgage that they put you into, right? And so there's like the high service options, and then there's like these more like direct call center type of options that are out there. You know what I mean? And so there's like this idea behind the banks where they don't want to pay those commissions to the mortgage loan officers. And so they're experimenting with these like call centers where people are paid, $500 to close on a house compared to, a mortgage loan officer that might get 1% of a $500,000 mortgage. So that person, that's got that incentive to close, it's got, a lot more likelihood of focus on good customer service versus the person that's at the call center, where I guess, in my experience, the rate that you're offered is often not that different at all. It's a lot of times it's identical, at least for the doctor mortgage products that we see on the site. We see the call center and the, individual banker, deals really with the same costs. And so the bank is just sort of gambling that you'll go with the lower service option so they can get a higher margin. So, so there's that option, like the doctor mortgage option, and there's like the Freddie Fannie option, right? Where you can do like a government underwritten mortgage, and then, the mortgage loan officer is going to offer you like these government insured stuff. And that's, a lot of times you're doing the first time FHA, 3.5% down with PMI kind of option, right? Which is not a doctor mortgage. And then they'll have the 20% down conventional, like the mortgage everybody thinks of, right? So I mean, in terms of in terms of getting deals, like looking at loan like offers, right? Like, what would you say is a reasonable number of people to talk to, a reasonable number of banks to talk to? Because obviously you want to shop around. So I'm just sort of curious with your experience, like what's a good number of loan officers to submit to get quotes, just to see what your options are.
That's a great question. And I do recommend you talk to a few different ones. Like you should shop around for your LO and your realtor. I'd say talk to 2 to 4 different ones that you might have been referred to, right? Or maybe you found one online because of their great reviews. Maybe you have a family friend. Here's the best way to find a good LO is find someone that you know who like it. The best LO is, hey, Megan had a great experience with hers, so her friend who's looking to buy should talk to Megan, and Megan should refer that LO to him, and he's probably going to be super happy, right? So try to find maybe 2 or 3 to interview, right? But you're not going to know who's the cheapest. It's like actually literally impossible to know who's the cheapest because, hey, well, mortgage rates change like 2 to 3 times a day for everybody. It's just like the stock market. It goes up and down, up and down. I mean, it's literally the bond market, basically. And so, okay, if rates change 2 to 3 times a day for every single lender, you go call lender A and they tell you, and by the way, if you just cold call a lender and say, what's your rate, they're probably going to roll their eyes and probably not be incentivized to tell you the truth, because if they are truthful and you don't like what their rate sounds like with no extra context too about cost, points, or lack thereof, they know that you're just going to hang up the phone and go to the next guy. So let's assume everybody's telling the truth too. And if they are, it's still impossible to know who's the cheapest because, again, you go call lender A, they're truthful, they say, hey, our no points option, meaning you're not paying anything extra for the rate, is 6.5%. And then 2 hours go by, you get on your lunch break, you're gonna go call another lender. The market went down, rates went down, right? But in those 2 hours, you go call the next lender and they say, yeah, no, we can do that same deal that you wanted to quote for 6.375. And then you're ecstatic because you've just found a cheaper lender, but the market just went down. So if you went and go call lender A, maybe they're down to a 6.25, right? Or maybe they're actually now $1,000 cheaper, right? Whatever it is, that happens 3 times a day. And so, and by the way, you don't lock an interest rate until you're under contract. So it's gonna change like 1,000 times if you're doing this right and finding the lender 6 months ahead of time. And
Yeah.
so the long story short is you're never going to know if you have the cheapest lender or not. And so don't use it as a way to find that lender 6 months ahead of time. And also, as you kind of alluded to, cheap is most of the time not better, not necessarily, right? You don't want your LO being paid $500 to handle your $1 million transaction.
Right. Well,
And so,
I've found too that there's a lot of like regulation that's both helpful and super annoying when it comes to like buying a home. So like
yeah,
the one thing that's helpful, I think, is like LOs have to give you a loan estimate, which is like this formal regulated document to make it
yes.
really clear, like what are your closing costs, like what are your, loan costs, like what are the costs that you can shop for, what are the ones you can't shop for, because it worked out with our mortgage banker, but we kind of got taken for a ride a little bit because they quoted us a rate and I didn't realize it was a biweekly payment, not a monthly mortgage payment. And the biweekly
Ooh.
payment worked out to being like
Whoa.
a 26-year. It was a 26-year term instead of a 30-year term because of the biweekly payment structure, which is not the same thing as a 30-year fix. So we were getting quoted a rate and they never conveniently mentioned that it was a biweekly option, which was not as good as if you could lock in a 2-something rate, you'd rather lock it in for 30 years instead of 26, right? So it wasn't apples and apples. And then and like there's also catches with doctor mortgages where they want you to have a bank account open with their company sometimes.
Yes.
And some bankers will transparently tell you, well, you just have to have a $50 bank account. Like that's what we did. Like we just opened a $50 checking account and they never like checked anything. And so that was kind of one of the benefits to me was like, I really don't want to open a bank account with this place. I just want to get a good rate on my mortgage. But there's, I guess, like, you're dealing with salespeople, which there's good and bad salespeople, right? So like I guess we encountered a lot of like kind of bait and switch stuff. So to me, like the way around that is just telling people like, just send me an initial loan estimate or something like that, right? Like, can you talk
Correct.
about that?
And no, I'm glad you brought up the loan estimate, because if you do care about the rate, which you should, it's just not how you decide who your trusted person is necessarily. But at some point, we got to talk about the rate, right? And the way to actually find out if you're getting a good deal or not is not a quote, it's what's called a loan estimate. But if you don't know how to read a loan estimate, you can absolutely be taken advantage of. I can make a loan estimate look great when it's not. So I think we might have another webinar down the line of like, hey, here's after you after you got under contract, what do you do next? That's when you should be able to get a loan estimate. And we'll go, maybe in the future, we'll go over how to read it, because only one section out of like only 5% of the loan estimate actually has anything to do with your lender fees. Everything else is different. And so I could make your closing costs look like nothing by saying, I think your homeowner's insurance is going to be $200 a year. I think the title fees, even though I've not met the escrow officer because the seller picks it, I'm going to say it's $500, even though it's really 4,000, right? And then, so you see what I mean. So the loan estimate's important. And once you know how to read it, that's the thing to ask for. And then ask that from 1 to 2 other lenders too. And ask for the same rate, same purchase price, same loan amount. And once you know how to read the loan estimate, then you can just compare them line by line and see what is objectively better. But until you have those loan estimates, you have no idea what the lender could be saying something, who knows? Does that answer your question?
Yeah, I think it did. I mean, I guess, but the loan estimate, as long as you're getting like quotes from like 2, 3, 4 different places, right? To me, the whole like, are the drains gonna explode on you, is like way more important than the exact interest rate that you get on your mortgage, because you'll probably refinance the mortgage if rates go down. So it's like you're not even probably gonna be locked into that rate if rates do fall at any point in the next 20 years, right? So like to me, it's like way more important because in 2021 that was like a panic kind of thing, like people were panic buying like that. I mean, it kind of happened to us, even though I know better. And the simple reason was my wife was like constantly living in apartments. She got laid off in the pandemic. She was stressed out to the nines, and we had a baby and a baby on the way. And she just had this like sort of moment where she was just like, we're buying a house no matter what. Like we're, whatever
Mhm.
it takes. And I was super cheap. And I was like, okay, here's our budget. In retrospect, what I should have said is, okay, let's have our budget be 50% higher so we can buy a place with like fewer issues. You know what I mean? Um, and then like, so it's kind of like my fault, but like, because of the market, because of how crazy it was, like we didn't do the drain snakeage and I'm not an expert in house buying. Like, I know student loans cold, but like house buying, I don't. And so we did the best we could. And I felt like, a lot of the stuff that you would normally do because of the market, you just, people would just like not accept your offer and they would go with a different offer. You know what I mean? So I think
2020 and 2021.
I think that's one thing that's like good, because now like you have time. Like now there's no rush because like, yeah, there's multiple offers on houses that are amazing, but like not that many like at all compared to what it used to be. So like, now like I know, Megan, you're talking about liking the home and stuff, or envisioning yourself there.
Mm.
But this home is not your wife or your husband. It's a place, and you'll probably live in another home at some point. Like one of two things will happen, right? You'll either really like the house and you'll stay there for a long time, or you won't and you'll like trade into a better house. Like one of those two things is going to happen, right? So that takes the pressure off, I think, a little bit. And so I would just really push people to like go overboard on investing in the house inspection and to do more than what your lender requires, right? Like
Absolutely.
ask the home inspector, hey, is there other extra stuff that I can pay you to do? Snake the drain, inspect the water main, homeowner, can you provide me like utility statements for the past, 3 years so I can see if you've had a bunch of leaky, water reports, right? Like that would have been a red flag for us if we had asked for the water usage reports. Um, So
One of
I
my
don't know.
friends is a realtor, and she says to drive by the house when it's raining, like pouring,
Oh
and see if
yeah.
there's any like pooling of water or drainage issues.
Mm.
Drive there in the morning, like act like you're driving to work from the house to make sure like the traffic is like, okay, or you don't live on a really horrible road to get out in the morning, that type of thing. So
Yeah.
lots of little cool tips there.
Yeah, and that's really where the getting a pro realtor, we'll talk more about that in a minute,
Yeah.
it really comes in handy. Like they will tell you if they're a pro, like, hey, get X, Y, and Z, added onto your home inspection. Get the, snake the drains, right? Like I
Mm-hmm.
loved our realtor because that's the stuff like I'm not an expert in. I know the numbers. I don't know, like, I don't know how to fix a house. I don't know what's wrong
Yeah.
with it just from looking at it. And he's like, this is like $200 extra on the home inspection, but like, get this done. And,
Yeah. And if they
get
know
paid
the
for that.
area too, they know like what other houses that they've sold in the area or other like people that they know in the area have had issues with that they can check in on. Does this house have that same issue or does this neighborhood have that same issue that, was going on with my other buyer, So having a pro realtor is also something, but we're going to get to that. I think this next section will just be, I think a lot of questions stem from like, well, what is the mortgage lender looking at when they're looking at me for a mortgage, like what matters. And there's really four big things that matter. So first is other debt, right? And we talk about that a lot with student loans, but so with debt, they're looking at installment loans, so other loans that you have, they're looking at revolving debt. So are you paying your credit cards down? Other properties that you might have. So we might have some folks in here who have rental property or like their first home. They plan on keeping that home before they, as they're moving. And then there's some ratios to know about, right, David? Like pretty important ratios.
Yeah, the biggest thing in getting qualified and being qualified to buy a home is your debt to income ratio. Credit's on there. They look at your credit score. What's on your credit report matters way more, and what matters above all else is DTI, debt to income. Everything else is sub to that. And this whole slide here, the main part of this is just like, what really is a pre-approval? All a pre-approval is, and here is the biggest secret in the mortgage industry. All a pre-approval is somebody's guess. Maybe it's an educated one, maybe it's not, but somebody's guess as to whether you're going to be approved for X purchase price with Y and A, B, and C variables. That is it. When you get a lot of people mistakenly think they got that pre-approval letter, they're good to go. Who knows? I have no clue. If
It's like
you,
a quote.
yeah,
It's like a pre-approval, even for like if you're going and refinancing student loans, like that's what they think they can give you, but they still have to go through the guts of your finances, right? To actually get to the true
it,
approval.
exactly. And a pro lender will ask you for pretty much anything you could possibly think of up front, right?
Mm-hmm.
They'll ask for bank statements, they'll ask for pay stubs, they'll ask for if you're self-employed, business tax returns, personal tax returns. You're not going to need to give all that stuff depending on what type of income you make, but you get the idea. It might feel encumbersome. But if it feels encumbersome before you start looking at properties, that's probably the right way to do it. Because what, for example, I do is you're supposed to like, hey, I'm trying to be better than the underwriters. I'm trying to poke as many holes as possible in your potential scenario that could derail us and come up with a solution ahead of time.
Mm-hmm.
That's great. That way you can go make an offer and your LO can go call the listing agent and say, hey, I pulled credit. I got docs. I've done 100 transactions. This will close. Take our deal. That is much likely going to get you a better purchase price or even your offer accepted at all versus like a cash offer, or if you're up against other, offers versus if you don't have a lender who did that. And what's most important is what if you just filled out an online application, you put in what you thought your income is, which is going to be treated differently depending on if you go for the doctor mortgage, if you go for a conventional, if you go for an FHA, if you go for a VA. They all have different rules regarding how different types of income are treated. And so I've never once seen even the smartest like physician or engineer get their income right. nobody knows what their income is, but they're going to put it on the application, right? Throw in the chat, bonus question. What's the difference between like being paid bi-weekly every 2 weeks or being paid twice a month? There is a huge difference, and that could be whether you're homeless or not, if you know what the difference is. But either way, it's, hey, you got all these different mortgage products. If your lender doesn't know that, hey, you put in your application that you make $3,000 extra a month because of overtime or bonus income or stock option income, right? But then they don't take, they don't ask for your last 2 year-to-date pay stubs, which might take you a couple days to go get, right? It's just that's what they need to qualify that. And so you might love your lender because you found an online lender that you just put in a bunch of variables and then they kick out a pre-approval letter because technically they use those variables through an underwriting system. But what if, again, they never looked at it? They never actually looked at the credit report themselves.
Yeah.
They didn't look
It
at your
wasn't
bank statement.
personalized to
Yeah,
you, which
they didn't see that child support you pay on your bank statement, and then the underwriter notices that halfway through, and then the deal's dead, right? And so it's just that's why trust is so important. And that what is a pre-approval? It's somebody taking a look at your scenario and saying, I think this will be okay or not. And
yeah.
if
Or
you
here's
don't
some
have
things
that,
to change in advance,
yeah,
right? Like here's some quick little tips to do, like because our lender, me and my husband are both business owners, so we knew that our income situation would be a little funny. Like we don't have W-2s to hand over or paychecks to hand over. And so we went into the conversation like, hey, what do we need to be showing? Like, do we need, 2 strong years of income? And his tips were really, really helpful. Like he was talking about how like it will look at 2 good, the most 2 recent tax return years. And we were close to filing another tax return. And we intentionally delayed actually getting pre-approved until after we filed that next tax return, because the next tax return was better for our average of income. And so things like that, like just like with a student loan plan, like there's not a cookie cutter plan for student loans. We all know that, I think, at this point. Probably with the mortgage process too. Like there's not a cookie cutter process because there's so many little variables that go into your pre-approval or your mortgage that could be like tweaked here and there to make it better. And like you said, to like, make sure that there's no holes that we need to fill before we actually go in for the real thing. So,
yeah, I think I love that you some things I love that you touched on was, that different like tax, it literally impacted your tax strategy, right? And
it
so
did.
the shameless plug, but like, hey, here's why you need to work with like a financial advisor, a team who knows, hey, how are student loans going to play into this? How, if you're a business owner, like, what do we need to do on the tax side? Like most people who keep everything separate, they have their tax accountant, right? They have their financial advisor, and then they listen to their friend about their student loans, right? Well, gosh, none of those things are talking with each other. And maybe your great CPA is a phenomenal CPA who will save you the most legally on taxes possible for your S corp, right? But then, oh my gosh, they did not know how that legal strategy to save you on taxes, destroyed your purchase, right? And so you need a team that is all working together who knows how all these things play into each other. But that's what a pre-approval is.
And I saw some questions on credit. Like it's not just about the score, right? It's about the guts, like what is in your credit itself, which you can get a free credit report at annualcreditreport.com. You can download a free credit report from one of the 3 credit reporting companies at any time once a year, but you have 3. So you could pull one at any time from each one of those throughout the year. And it is important, like the guts. And we get the question a lot about, well, how does student loans factor into this, right? So maybe let's touch on that real quick, because that's pretty relevant to our crew.
Yeah, I can talk about student loans in a minute. Let's see here. Travis, do you need I think you need to say something real quick though. Is that right?
Well, I don't need to say anything, but I always love to. So I mean, so just real quick, I just thought I would mention about like the physician loan, doctor loan stuff and how that plays into things. We obviously have a lot of people that are dentists, physicians, veterinarians, et cetera, that might qualify for that. and they might be wondering, like, what about the doctor mortgage? You know, should I do that versus other kinds of mortgages? We're working on a like a should you buy a home and residency calculator. So we hope we'll be able to publish that soon on the site. But like in general with doctor mortgages, I know this business just because of being the website publisher that takes all these people's applications to advertise, and like how readers either love it or don't like it, and like what I've seen from that experience, right? And I've also
Mhm.
used a doctor mortgage to buy our own house. So like just so that people know what a doctor mortgage is. So if you have a professional credential, sometimes you can even get this as a lawyer or a PA or an NP. Not always, but sometimes, right? You know, you can get these mortgages that are held by the bank instead of by Freddie or Fannie Mac, Freddie Mac or Fannie Mae, right? Like the government mortgages, right? And so if the bank's going to take that mortgage under their own balance sheet, you know, it's going to depend on how the economy is doing if they want to do that, right? So like David, we saw in 2021, 2022, when before the regional banking crisis, like there were programs for chiropractors out there. Like there were programs for like nurses, just people with RNs, right? And the
Mhm.
banks were just making these 0 down or 5% down mortgages with no PMI up to like $1 million. And they weren't really, you know, that picky, honestly. And then in
Yeah.
2023, like you had Silicon Valley Bank and all these things happen. Like, you know, investors got really nervous about regional banks and they said, hey, tighten up your balance sheets. And so we saw a massive withdrawal of programs, like massive. So like the number of doctor mortgage programs out there is way less than it used to be. And so if you're a dentist or physician, you still have a lot of options. So if you're a dentist or physician, the link I posted in the chat will probably get you at least 2 or 3 different options from banks, depending on the state you live in. And you'll probably have pretty good choices to pick from. And, you know, David, from what I've seen, maybe you tell me if it's wrong, but from what I've seen, the doctor mortgage rates are usually about the same as what you get with conventional going through a mortgage broker, except the difference is you can put down 0, 5, or 10% down on also much higher limits with no PMI. Do you disagree with that, or is that what you've seen?
It all depends. Yes, that
Yeah,
can very much be the case. Like if you have perfect credit, here, here's where I would highly consider a doctor mortgage is if you're in a market where it's competitive, but maybe you don't need to have the ability for your lender to call your Ella or to call the seller's realtor to pitch your financing to say, hey, I know you want a 30-day close, but we have the ability to close in 15 if you want to, right? We're that good, right? If you need that ability to make sure that your LO can close your loan in 10 to 15 days, even if you don't have to, right? And if you are in a market where you might be looking at above $1 million purchase price, there are times where, I trust me, I love the doctor mortgage. There are times where it doesn't make sense. My wife and
sure.
I could have used a doctor mortgage, but we actively chose not to because I shopped around for it. I couldn't get a guarantee that even if I served all our docs on a silver platter because I'm an LO and I know what you need, right? They didn't feel comfortable saying that we could close fast enough for the San Diego market, basically. And
Yeah,
at over $1 million, you lose that 0 down, right? So it kind of turns
yep,
into a
it's
different
5.
purchase prices, like conventional mortgage. And so, but to your point, yeah, if you have great credit and you're below $1 million purchase price, it can be 0 down. It could be very similar rates to a conventional mortgage and no PMI. And if you have a good LO running the show, like it could be a phenomenal deal. It's just not for everyone. So
Like,
I'd look
and
into
and
it.
well, and your wife's a veterinarian too, so you know if she was a physician, she might have had 4 banks that could fight over her business. But if she's
That's
a
correct.
veterinarian in her market, she might have one bank fighting over her business that does a doctor mortgage, and so that one bank might do a variable rate where they're going to only lock it in for 7 years, and then it's going to float after that, right? So in other words, like the doctor mortgage number of programs matters in terms of how good of a deal you get versus going conventional or going through like your local mortgage broker. So, you know, key is like shopping around, right? But I mean, I will say that we have a lot of people go through our website for doctor mortgages, like hundreds every month go through our website for doctor mortgages, mostly from like searching, you know, for stuff. And you know, we've had a lot of great feedback from that. But I'll say that, you know, you always shop around. And even if you get the world's best mortgage deal, it's kind of like, in my opinion, somewhat irrelevant because of our shower exploding in reverse from the drain while I was using it. TMI, but like that's something that may or may not have actually happened to me. And it's pretty terrifying. You forget about your 2.75 mortgage when the shower is trying to murder you. So
I think I
don't
have
know.
seen that in a horror movie.
Yeah,
Oh,
it's
God.
like I felt like I was in a movie, and I'm like, and then the thing is you're all by yourself, and so you're like, and it was I don't know, it was very traumatic, very traumatic. And then of course, like I felt like kind of how most some of our student loan borrowers might have felt, because the plumber came out and he's like, "Can I show you something?" And he just took the plunger and he went over the drain and he just like boom, 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 and did some really quick stuff, and then it like went away. Like, and he was like fixed. And I was like, oh, that's probably like a consolidation on somebody that's been in repayment for 20 years. Like, you just gotta consolidate and you're done, Like I just felt so funny after that. Um, but yeah, so like so for the people that are their match days coming up, right? Like some people, like you're going to, you're trading residency fellowship, right? Or maybe you're taking your first job out of school or something like that. Um, you know, Dr. Mortgages are an option. We've got a pretty good marketplace for it, which again I'll put in the chat. But it's by no means, David, something that you should just go with without thinking, right? You still want to talk to some other options and compare what you get from Dr. Mortgage people through non-Dr. Mortgage people to see what that loan estimate says in terms of the cost and the payment and the points and stuff, right?
Exactly. You should definitely shop around. It's not a one size fit all. That's for any mortgage product. And in fact, you should probably shop the doc mortgage a little bit more because of, like you said, it's kind of a conventional mortgage. Everybody's conventional mortgage works the same. It's a standardized product. Whereas as you mentioned, like in the past, there could have been thousands of different offerings for doctor mortgages, and now it's tighter. Right? And so every bank's doctor mortgage could look different from the next one. And so yeah, it's just not a one size fit all, but it could be a phenomenal product.
And
Megan,
this is
Megan,
why yeah, go ahead.
well, I was just going to ask you a financial planning question, if
Oh,
I
sure.
if I could. So like if you could do, say you have like 750K house, and you could do zero down with Dr. Mortgage, or you could do like 20% down and do something like more traditional, right? So
Mhm.
like with interest rates being so high and people like taking itemized deductions, like if somebody wants to furnish the house, maybe do some renovations, stuff like that, like could you talk through how you might be able to get like bigger tax deductions by doing a doctor mortgage, like with the interest being higher, instead
Mhm.
of like financing the stuff with like a personal loan or something? Like, why would that be better to like use your down payment for like some of the stuff like the furnishings and the renovations versus, why is that more tax efficient potentially than just doing like 20 down and then doing a personal loan and doing the doctor mortgage with lower down payment?
Yeah, yeah. So of course, having a larger down payment, you're going to be putting more cash towards the house. So it's in the house, gone. But there might be reasons why you want to use some cash for like improving the house, for furnishing, just like you said. So a 0% loan may not be a bad idea because then you keep that cash to use for other things. But the more you owe on the property, the more interest you're going to be paying, right? But we also have a interest deduction that you can take on the interest that you're paying on the home, which could very well be higher than the standard deduction if you're calculating it out for the year. So it may not be a bad idea. It could be a tax strategy in a way to finance more of the home, have more of a deduction to give yourself more freedom to be able to go and purchase those things that you otherwise would maybe have to use a loan for. So let's say you chose to put 20% down on the home. You don't have that cash anymore. But you really needed money for furnishing the house or for a small like cosmetic thing that you wanted to do, paint the house, new flooring, whatever it is. So now you don't have the cash, you have to finance that. So you're paying, maybe you're putting that on a credit card, or maybe you're putting that on a personal loan. That loan interest is not deductible, but the mortgage interest that you're paying is deductible. So we have to think about it from that way too. Um, and interest rates are not awesome right now, of course, compared to where they were. So that is part of the conversation. But that's something that could be potentially refinanced in the future as well. So there's so many like little pros and cons and little things that you have to talk through. And this is why like having somebody in your corner that knows all the rest of your finances could be helpful to really weigh what you should be doing and talking through the pros and cons to help you come up with a more like educated decision on what you want to do versus like, oh, well, this is what I've always heard, or oh, this is what my uncle told me, or whatever. Like
But
we'd put together more of a plan.
But if you have like a 3% mortgage, a lot of people probably would be doing the standard deduction because the mortgage interest
Mhm.
you're paying is not all that high.
Not that much.
Whereas with
Mhm.
6%, pretty much everybody's going to be itemizing. And so if your tax rate is like 30-40%, you know, and the after-tax equivalent rate on that 6% is more like 4 or like 3.5, right? So like that's I guess like the importance of financial planning with this. Like you could save thousands of dollars a year just by like more tax efficiently structuring like how you do this, right? Because like,
And
yeah,
and Logan on our tax team brought up something in a meeting yesterday that the standard deduction is getting cut in half in a couple of years. So
Mhm.
that mortgage interest
Ooh.
deduction might be even more valuable.
Ooh,
Yeah.
that's going to be a
you,
game
you,
changer.
Yeah.
you cited the bank rate calculator. I think we've got a better calculator on
Oh.
student loan planner. It's all good.
Yeah,
It's
my
all
bad.
good.
Hey,
Ouch.
I'm pretty unbiased here.
No, I know. I'm just
Um,
that's good. That's your fiduciary, right? It's what your job is.
yeah.
But that ours like goes through like the 0 down, 5 down, 10 down, 20 down
Yeah.
options with the down payment, which allows you to see kind of like how much mortgage interest you'd be paying a year. You know, if it's over, what is it, 14,000 standard deduction for a single, 28 for a couple, something like that.
I think it's
Oh
13.
yes.
Yeah.
Something
Right
like
around there.
that. But you know, so you can see if you'd be itemizing. But guys, I think I had too much caffeine. I'm just so excited about this. So I'm gonna try to hide again and let y'all close it
Yeah,
out.
we
All
got a
right.
couple more minutes. So,
Yeah,
we did
I'll
have a lot
try
of
to.
questions about like how student loans play in. So let's touch on that and then we'll get to some last little comments. And then also know that we are planning on making this somewhat of a series. So we'll have some future webinars with some more parts of the process of purchasing. So stay tuned for those here in the future.
Actually, yeah, Megan, do you mind if I share my screen real quick? I think I can
Sure.
answer all these student loan questions, DTI related, and we can just move
Yeah,
on. Let's see
go for it.
here. I'm gonna pull Travis and do some spreadsheet analysis. Let's see, post disabled participant screen sharing.
Oh, hang on. Sorry. I'll fix it. I'll fix
That's okay.
it.
Oh
There we go.
no.
You should do it.
There we go. Okay, because I am noticing a lot of, hey, how do your student loans play into this? How does DTI work in the first place? And here's why it's so important to get, whether it's your financial advisor, whether it's your LO, if your goal is to buy a home, they need to know how do all these things work. So debt to income is just your monthly debt obligations, the monthly payments. They actually don't even care about the balance. If you have 600 grand student loans, that could be great or it could be terrible. That doesn't matter. It's the monthly payment, including the proposed mortgage payment, including tax and insurance, all that kind of stuff, PMI, divided by your gross monthly income. Gross. And hey, again, remember, this number is very complicated. But hey, let's just say somebody for this example is making 10 grand a month, gross. Okay. And let's say they're buying I don't know, a $500,000 home. I'll even say I did this as a $500,000 home, putting 3% down, so minimum down on a first-time home buyer for conventional, right? So it's about a 485K mortgage. And so that might be your mortgage payment, the proposed one, including tax, insurance, PMI, everything. Let's say you have an auto loan, and let's say the payment's $500 per month. Student loans, here's to answer the question. What if you're on the 10-year payment plan? Because maybe that might make sense for you, but maybe it's not, because a lot of people just default to the 10-year. And so maybe your mortgage payment or your student loan payment is 2 grand a month, and that's what it shows in your credit report. If you don't get an LO who knows how student loans work, because hey, you technically could control this number, well, hey, oh my God, deal's dead, because all that divided by that is 60%. The key number is really 50. There's a lot more ratios over there, but this would be a deal killer in most scenarios. But what if you have your student loan consult, you find out that, hey, financially speaking, you should probably consolidate before the IDR waiver, for example, and then get on save. And then all of a sudden and then, hey, maybe you should do married filing separately too, right? There's a ton of strategies out there. Everyone's different for what you should do, but hey, maybe you get your student loan payment to $800 per month and it's still cheaper over the long run. Okay, deal is safe. That's how your student, so you need to find a lender who understands how does student loans work? What's the needed documentation if we're on an IDR payment plan, right? Because that can be the difference between getting the home you want and not, period, end of story. And so this is super important. So long story short, the lower these numbers are, the better. And here's why you should sell your car. Let's say you have 800 grand of student loans because you're, you know, a very successful dentist. And you might, you know, again, if you did the standard 10-year, or even if in the best IDR world, you know, hey, you might have, again, a really high student loan payment, but if you got rid of that car loan, now all of a sudden you could go FHA and this would actually be fine. So car loans are killers. So that's why, hey, jokingly, but not jokingly, like the best type of car is a paid off one. And so if you can't pay off the car loan, maybe sell it. Maybe sell the car. I'm just kidding, but also not. That's how DTI works. The student loans can play a huge part. And you actually have a lot of control over what number would go into your credit report, unlike all the other stuff. So
Yeah,
super
having the right
important.
student loan plan could be crucial. And also, a lot of the student loan servicers now literally have a feature in their online portal where you could download a mortgage, like a mortgage related document. I'm trying to remember the word. It's like basically it tells them like, hey, here's our payment. The payment is this for 12 months. And that's what the mortgage lender would need to see. So that's on a lot of the servicer websites right now. Now,
Real
if you
quick,
need
can
us,
oh,
yeah, go
sorry.
ahead. Go
Can I
ahead.
ask the tricky question? What if somebody's student loan payment is zero? I imagine, I think a couple folks
Oh,
in the
yeah,
chat might have mentioned this too.
There are
that's
some
a good question.
programs that would allow that. You just need the right documentation and you need the right loan officer know what to ask for. But you can have
Yeah.
a $0 per month payment factored into your DTI if you are on a $0 per month payment. It gets complicated, but it is possible.
Is that official
Mhm.
statement of payments that the servicer offers? Is that generally enough to satisfy for that?
If you have the right loan product, yes. But that
Mhm.
statement that you download from your loan servicer that details out $0 per month payment, like that's what you're looking for.
Yeah, there was some problems with that during the COVID forbearance because sometimes a mortgage lender who wasn't maybe experienced with student loans would assume like 1% of the balance as
Oh, it
if that
was
was the monthly payment, which was bad for a lot of folks who were trying to buy a house during that time. So we were like, you know, trying to get people to just enter repayment for a couple months on the income driven plan, waive the zero, you know,
oh,
zero payment time frame.
it was a huge deal. And, you know, funny thing, I won't spend too much time on it, is back then, yeah, if you're doing a conventional loan, 1% or 0.5% if they just flipped it from, you know, Fannie to Freddie. But 99% of LOs didn't know that, but that could make a huge difference. And
Yeah.
so,
But that was
yeah,
still like a big number for a lot of people. So yeah, having an LO that understands the student loans, understands income driven repayment could be super helpful if you're someone who's on that income driven plan going towards loan forgiveness. And if you're not sure if you're on the right plan for your student loans, we could certainly help with that. Here's our booking link. It allows you to schedule a student loan consult if you've never had one with us. Or if you need a refresh, you could also do a follow-up consultation. There's been a lot of changes in the student loan world over the past couple of years. That's an understatement, I feel like. And this link will also give you a discount if you're interested in financial planning. So, you know, student loans is one piece of the puzzle. Buying a house is another piece of the puzzle of your finances. But if you would like some comprehensive help with just pulling all of these things together and getting a plan together for all of your financial planning needs, that link will take you to where you can schedule both the student loan consult if you've never done one with us before, and then also a meeting for starting a financial planning relationship with us. If you've done a student loan consult with us before, awesome. You could just go straight to the financial planning link and you can set up a time to get together with us for financial planning. And we could also do a refresh of your student loan plan if you've done one with us before. Man, but this was fun. I felt like there was a lot of information. I think buying a home is a big process, so it does deserve some more attention in other areas that we didn't get to today. So like we mentioned, we do plan on having this as part of a series. So some of the other topics we were thinking about coming up with here in the future for a future webinar would be, life after the purchase, like maintaining the home improvements, emergency reserves, things like that. If we're looking into real estate for like diversifying your assets, like purchasing more properties in the future, we could I think we will want to have one on that, right? That's a hot topic in a couple of our profession spaces. We get that as a goal a lot. And then real estate and taxes, like really how like the real estate side of things can be beneficial from like a tax perspective and when it's not beneficial. I think sometimes folks feel like real estate or even owning a home is the end all be all, and it doesn't need to be, it doesn't have to be. There's a lot of reasons for purchasing real estate personally for your own residence or like for an investment. And there's a lot of reasons why you shouldn't. So we need to talk about those other reasons too, because a lot of people get, overwhelmed with some of the negative things that can happen, like Travis over there.
Yeah.
So
I'll tell you why you should buy it. Travis will tell you why you shouldn't, and then we'll come to a happy medium for everyone.
I mean, can I say like one thing that would have really helped us, to be honest, though? Like the biggest thing that financial planning does is it just like takes two people that have different views on the way something should happen, and it puts a neutral referee in the middle to talk through it in detail. Like that would have been so helpful because like the whole process was so intense. Like I even had like a panic attack before we signed on the house just because, I was having a lot of problems with anxiety during the pandemic in general. And, the house was super stressful because I really didn't want to be a chump and buy like a bad house. And turns out I did. I mean, it's okay though. It worked out. Like we're going to have a nice house, I think, long term after this renovation. But like, it would have been really helpful if we had had a financial planner at that time to like have me and my wife like sitting down in an organized meeting saying like, hey, Travis, like this is a little unrealistic about like the costs that you think you're going to incur after this renovation, just to let you know. So if you're going to incur at least $500,000 renovation costs, maybe you should look at a $1 million house instead of a $700K house. Like that would have been super, super helpful. And if somebody had talked to me about just like, and on the converse, like someone could have spoken to my wife, hey, like, what do you think about like your other goals that you want to have? Like, do you want to have this amount of money left over for furnishing the house, renovating the house, fixing the house up? Are we being accurate in how much that's going to cost?
do you have the
And then
bandwidth for like renovating a house? I think
yeah, like
sometimes that's like very
do you want to
overwhelming.
move out of the house for an entire year?
Mhm.
Like is that something that you want to do? That's and they always say like a renovation is 30% more than what the contractor tells you it's going to be. I think, this is a little maybe controversial, but I think it's probably double. I think it's probably double what you're told it's going to be, because what happens is you get into the house and then you think, man, we should really do this. Oh man, we should really fix this problem with it. Oh man, it'd be great if we could have a backyard. Oh man, it'd be great if we could, expand the driveway that's got a weird kink in it. And people are always running off the side of the driveway when they're backing up, like you find all these things and then the house, like the costs just go way up. So I think that I would argue that that slpwealth.com/book, that 99 a month financial planning would probably pay for itself, I would think, at least fivefold for anybody that's about to buy a house, just in terms of like helping people think through what are they missing, what's the right way to buy the mortgage, what's the right way to buy a mortgage,
What
what's
emergency savings to have,
how
what
much how much
maintenance
emergency
savings do you
savings.
need?
Yeah, like what's
What should
what's a
you put
realistic
down?
number for
Yeah.
maintenance costs? What's the most tax efficient way to structure your purchase in terms of like how much you put down, how much you hold in reserve for things that are not going to be tax deductible, but you could indirectly make it tax deductible by doing a lower down payment on the mortgage, right? So, I think that I'll put that link in there one more time in the chat for anybody who is interested in giving it a shot. But that's profession specific financial planning too, right? So, if we've got dentists or physicians, like they're going to our dentist and physician group. If we've got veterinarians, we have a vet med group, we have a lawyer specific group, and those planners are equipped to have conversations about conventional versus professional mortgages and the pros and cons. And, y'all are fiduciaries, right, Megan? So, you're a fiduciary, meaning that, you don't get paid a kickback on the mortgage, whereas, the mortgage broker obviously does. And so, they've got a different level of care to you than somebody who's a fiduciary. So your fiduciary, you're going to be looking out for what's the best interest of the client. So, yeah, I mean, given that we don't require people to sign a minimum contract length, in the worst case scenario, people could do financial planning for like 3 or 4 months, get thousands of dollars of value out of it, and then not continue it. I mean, so that's a pretty no risk proposition, I think, for anybody who's, who wants somebody to help them in the process versus just going it alone and potentially making a bunch of really bad mistakes like I did.
Yeah. Well, and we look for the long-term relationships too. Like, I think the funnest part of being a financial planner is watching clients achieve these goals. Like
Oh,
watching
yeah.
people buy that house, watching people have kids, grow into the house, move to a new, like, it's so fun to watch you guys like thrive financially. Like your goals are literally our goals. Like we want to help you get there just as much. Well, debatable, but just as much as you want to get there for sure. Like our
Well,
goal is to get you there too.
and the semi-annual check-in meetings too, like, do you, like, this is a rhetorical question, but like, do you want to track the mortgage interest rate market and to know when you need to be looking into refinancing your mortgage? Like that's something that a financial planner is going to track for you. Like when you're doing our regular scheduled semi-annual check-in meetings with SLP Wealth, if people do book that service, that's one of the things that we would talk about is, you've got a 6% mortgage. Let's say the rates go down a little bit and it's 4. Well, your mortgage broker that did your earlier mortgage might call you up, David, right? And they might put you into their 5% mortgage. Well, oh, by the way, did you know that there's like another option out there that'll do it for 4, but they're not telling you that because they don't get paid on that. And so that's the benefit of having a fiduciary versus going it alone is, it's a lot of stuff out there that people have to keep track of and think through. And, having that neutral, referee when you've got the complication of marriage mixed in or long-term partnership mixed in, you've got 2 different opinions to think through. I think it also kind of helps remove stress from relationships, frankly, too. Because, money is like one of the top reasons relationships don't work out. And I think that's just because it's really stressful to talk about, a house and how much we want to reserve for renovations. And I mean, thank goodness my wife and I have enough money to pay for our renovation, because otherwise we would have been, totally in a bad spot, because there's all these things they discovered and all these like unexpected expenses. And like, if we were financing that, like with huge monthly payments and, man, that'd be creating tons of conflict in our marriage if we were financing like this fancy wallpaper that we're doing in the kids' rooms that they're not even going to recognize. That's my personal thought. But I just think, we don't want to undersell the value of having somebody on your team that is looking out for your interests. So I'll put that link in there one last time, slpwealth.com/book. We'll send out the recording later.
Look out for future webinars as well. We'll start to unfold, I think, these layers of the onion with buying a house. So stay tuned for future ones. If you can't make future ones, like timing wise, as long as you register, you'll get the link to be able to watch it later. So, but thanks for hanging out with us this morning. I know it's early morning for a lot of folks, and I hope y'all have a great rest of your day. Thank you guys for jumping on with me.
Thank you. It was a pleasure.
Thanks.